Hello everyone. In this real estate video, we're discussing tariffs. These economic measures have significant implications that can affect various sectors of the economy, including real estate. Specifically, we will look into the proposed tariffs on goods from Canada and Mexico. These countries are not only our neighbors, but also major trading partners. The goods that cross these borders are crucial to many industries in the United States. You might be thinking, tariffs? That sounds as exciting as watching paint dry on C-SPAN. And you'd be right, it does sound mundane. But the details matter, and these details could impact your finances in unexpected ways. Tariffs have the potential to significantly impact the real estate sector, especially the construction industry, which is highly sensitive to changes in material costs. Imagine being a construction worker or a real estate agent and suddenly finding out that the cost of your materials has increased overnight. The tariffs targeted essential materials in the construction industry, such as lumber, steel, and aluminum. These materials are fundamental to any housing project. Without these materials, construction projects would face significant delays. This would affect not only new homes but also renovations and commercial projects. The intention behind the tariffs was to boost American manufacturing by making imported goods more expensive, thereby making American-made products more competitive. However, the reality is more complex. The tariffs created a range of unintended consequences. While they aimed to protect American jobs, they also introduced a lot of uncertainty in the market. If fully implemented, these tariffs would have driven up the cost of building materials. This means that everything from the price of a new home to the cost of a simple renovation would have increased, with these costs ultimately being passed on to consumers. This would result in more expensive homes, slower construction, and potentially, a lot of frustrated homebuyers. Imagine saving up for years to buy your dream home, only to find out that it's now out of your price range due to a trade policy. Existing homeowners looking to renovate would also be affected. If you're planning to update your kitchen or add a new room, those plans could suddenly become much more expensive. Imagine trying to explain to your spouse that the new kitchen remodel just doubled in price because of a trade policy. It's not just about the money, it's about the stress and frustration that come with unexpected costs. Not exactly a recipe for domestic bliss. So while tariffs might seem like a dry and boring topic, they have real-world consequences that can affect your life in very tangible ways. Stay tuned as we dive deeper into this complex issue. Now let's discuss the rising costs in construction. Tariffs on lumber and steel have contributed to higher costs for building new homes in America. These price increases can have a ripple effect throughout the entire economy. When construction costs rise, developers may face significant challenges. Projects that once seemed profitable might no longer be viable. Developers could scale back, delay, or even cancel projects. With fewer homes on the market, finding affordable housing becomes more challenging. It's not just new construction that is affected. Renovations, repairs, and basic maintenance also become more costly when material prices rise. So addressing that leaky faucet now might save you from higher costs later. The impact of tariffs extends beyond just construction costs. They can also contribute to inflation. When tariffs are applied to essential goods, prices tend to rise, and rising prices can lead to inflation. Inflation means that the purchasing power of your money decreases. This results in higher costs for everyday items like groceries and gasoline. The Federal Reserve, which manages interest rates, also monitors inflation. To control inflation, they may adjust interest rates. Higher interest rates can make loans, including mortgages, more expensive, so the cost of that new home may increase not just due to construction costs, but also because your monthly mortgage payment could rise with higher interest rates. Now, you might think that all this market fluctuation would be good news for renters. With the housing market in such a state of flux, it seems logical to assume that renters might find themselves in a more advantageous position. After all, if fewer people can afford to buy homes, the demand for rentals might increase. More demand could mean more options and potentially better deals for those looking to rent, but the reality is more nuanced. While a tighter housing market can lead to increased demand for rentals, it doesn't necessarily translate to a renter's paradise. The dynamics at play can be quite complex and multifaceted. It's complicated, like trying to explain a complex movie plot. On one hand, a constrained housing market can benefit landlords. With fewer homes available for purchase, landlords find themselves in a position to charge higher rents, capitalizing on the increased demand. Landlords can leverage the scarcity of available homes to their advantage, setting higher rental prices and potentially increasing their profit margins. With fewer homes available, they can charge higher rents. This is particularly true in urban areas where the demand for rental properties is already high. Landlords in these markets can see significant financial gains. Multifamily investors might find themselves with valuable assets. Multifamily properties such as apartment buildings can become lucrative investments in a tight housing market. The increased demand for rental units can lead to higher occupancy rates and consequently, higher rental income. But it's not all positive for everyone in the rental market. While landlords and investors might benefit, renters themselves can face significant challenges. Higher rents constrain budgets, making it difficult for many to find affordable housing options. Increased construction costs don't just affect new home buyers, they impact the rental market too. Landlords looking to renovate or maintain their properties are finding that the costs of materials and labor have surged. The increased costs of construction materials mean that any renovations or repairs become significantly more expensive. This can lead to higher rents as landlords try to recoup their investments. Renovations, repairs, maintenance, it all gets more expensive. And these costs are often passed down to the renters, leading to higher monthly payments and potentially making it harder for renters to find affordable housing. And if you're relying on affordable labor, it might be challenging to find it. The labor market has also been affected, with shortages in skilled workers driving up wages. This further adds to the costs that landlords face. The tariffs could lead to labor shortages in the construction industry, making it even more challenging to find affordable labor for property maintenance and renovations, which means finding a plumber who won't charge a premium will be difficult. The increased costs and labor shortages create a ripple effect, ultimately impacting renters who may find themselves paying more for less. With economic uncertainty in the air, you might be asking yourself, is there a stable option for real estate investors? In challenging times, there are always opportunities for those who know where to look. It's all about adapting, like a chameleon wearing a tiny hard hat. First, let's discuss buy and hold strategies. When housing supply decreases, existing properties tend to become more valuable. So if you own a rental property, hold on to it. It could become a significant asset. Just remember to account for higher maintenance costs. If you're interested in something more unconventional, consider alternative housing models. Mobile homes, prefab homes, co-living spaces, these are all gaining popularity, especially in areas with high housing costs. So, there you have it. The tariff situation has the potential to significantly impact the real estate market. It's not just about the numbers, it's about the ripple effects that can touch every corner of the industry. From the cost of materials to the price of homes, everything is interconnected. It's a roller coaster ride of rising costs, interest rate changes, and shifting market dynamics. Imagine trying to build a house on quicksand. That's what it can feel like navigating these turbulent times. The uncertainty can be daunting, but it's not insurmountable. But don't despair. There are ways to navigate this turbulent landscape. Real estate agents, investors, and developers are all finding creative solutions to stay afloat. It's about being proactive rather than reactive. First and foremost, stay informed. Knowledge is your best ally in these uncertain times. Regularly check market reports, read up on the latest news, and understand the broader economic factors at play. The more you know, the better equipped you'll be to make informed decisions. Keep your finger on the pulse of the market, track interest rates, and monitor economic indicators. These metrics can give you a sense of where the market is heading and help you anticipate changes before they happen. Stay up to date on any new developments in trade policies. The geopolitical landscape can have a direct impact on the real estate market, influencing everything from material costs to investor confidence. Knowledge is power, especially when it comes to making smart investment decisions. Second, be adaptable. Flexibility is key in a market that is constantly changing. What worked yesterday might not work today, and that's okay. The real estate market is constantly evolving, and the tariff situation just throws another wrench into the works. But remember, every challenge presents an opportunity for those willing to adapt. Be prepared to adjust your strategies, explore new opportunities, and don't be afraid to think outside the box or the traditional four walls of a house. Innovation often comes from necessity, and now is the time to get creative. Be prepared to adjust your strategies, explore new opportunities, and don't be afraid to think outside the box or the traditional four walls of a house. Innovation often comes from necessity, and now is the time to get creative. Look into innovative housing designs, consider co-working spaces, or even unconventional real estate solutions. The market is ripe for new ideas, and those who can think ahead will be the ones to thrive. And finally, remember that this too shall pass. The current trade policies won't last forever, and the real estate market will eventually find its footing. Patience and perseverance are essential. In the meantime, stay informed, be adaptable, and don't panic. Remember, every market has its ups and downs, and this is just another phase. The key is to stay calm, stay focused, and keep moving forward. The real estate landscape is always changing, but with the right mindset and strategies, you can navigate it successfully.